Unlike individual stocks, which can have wild price swings, sometimes for no apparent obvious reason, an index fund is an investment fund that is based on a preset basket of stocks. These index funds are created by what are known as fund managers, who work at an investment bank or a brokerage company. Index funds are a great way for new and even seasoned investors to put your hard-earned money into the markets without exposing it to severe downside risk outside of the entire market or the entire sector which the index fund is invested in crashing. So let's discuss the top 5 index funds people invest their money in. Let us know in the comments below if you're invested in any of these funds and why you chose them. In no particular order, let's start with number 1, Fidelity Zero Large Cap Index, ticker FNILX. The Fidelity Zero Large Cap Index Mutual Fund is part of the investment company's foray into mutual funds with no expense ratio, thus its zero moniker name. The fund doesn't officially track the S&P. Technically, it follows the Fidelity US Large Cap Index, but the difference is academic. The real difference is that investor-friendly Fidelity doesn't have to cough up a licensing fee to use the S&P name, keeping costs lower for investors. It has an expense ratio of 0%. This is a solid, safe fund to invest in because it tracks mega large cap companies only, very low risk, and gets you in the investing ballgame. Number 2, Shelton NASDAQ 100 Index Direct, ticker NASDX. The Shelton NASDAQ 100 Index Direct ETF tracks the performance of the largest non-financial companies in the NASDAQ 100 Index, which includes primarily tech companies. This mutual fund began trading in 2000 and has a strong record over the past 5 and 10 years. Its expense ratio is 0.5%. That means every $10,000 invested will cost $50 annually. Keep in mind, some funds have expense ratios because of their excellent performance over a long period. Number 3, Invesco QQQ Trust ETF, ticker QQQ. Okay, I'll tell you right off the bat, this is my personal favorite. The Invesco QQQ Trust ETF is another index fund that tracks the performance of the largest non-financial companies in the NASDAQ 100 Index. The QQQ Index has an excellent performance and low expense ratio. This ETF started trading in 1999 and it's managed by Invesco, a fund giant. This fund is the top performing large cap fund in terms of total return over the 15 years to September 2021, according to Lipper. Expense ratio is 0.20%. That means every $10,000 invested will cost $20 annually. It's a winner in every way, but it's all tech heavy. Super solid winner in a bull market, hands down. Number 4, Vanguard SP 500 ETF, ticker VOO. As its name suggests, the Vanguard SP 500 tracks the S&P 500 index, and it's one of the largest funds on the market with hundreds of billions in the fund. This ETF began trading in 2010, and it's backed by Vanguard, one of the powerhouses of the fund industry. Its expense ratio is 0.03%. That means every $10,000 invested will cost $3 annually. VOO is a super solid performer because it tracks the entire S&P 500. This fund is as smart yet safe as it gets. Can't go wrong with the VOO. Doesn't VOO sound like an energy bar or something? Number 5, SPDR S&P 500 ETF Trust, ticker SPY. The SPDR S&P 500 ETF is the granddaddy of ETFs, having been founded all the way back in 1993. It helped kick off the wave of ETF investing that has become so popular today. With hundreds of billions in the fund, it's among the most popular ETFs. The fund is sponsored by State Street Global Advisors, another heavyweight in the industry, and it tracks the S&P 500. Its expense ratio is only 0.09%. That means every $10,000 invested will cost $9.50 annually. Super safe and smart index fund to invest in. So it's now a good time to buy index funds. If you're buying an index fund or almost any broadly diversified stock fund such as the NASDAQ 100, it can be a good time to buy if you're prepared to hold it for the long term. That's because the market tends to rise over time as the economy grows and corporate profits increase. Time is your best friend because it allows you to compound your money, letting your money make money. It's crucial for investors to stick with a patient approach to ride out any short-term volatility. With all of the fear-mongering going on in the news with the R word, recession, being spoken every 2 seconds, it's challenging to want to invest in the market right now. I recommend adding money to the market regularly to take advantage of what's known as dollar cost averaging to lower your risk. Dollar cost averaging is when you invest smaller amounts at a time, maybe 5 to 10% of the total of what you want to invest. An even better option is setting up an automatic monthly investment account to put a few $100 or $1,000 in every month or two. A strong investing discipline will help you make money in the market over time. Some people try and time the market, but it's very challenging, and over the long term, nothing beats dollar cost averaging. Bottom line, these are some of the best index funds on the market, offering investors a way to own a broad collection of stocks at low cost, while still enjoying the benefits of diversification and lower risk. With those benefits, it's no surprise that these are some of the largest funds on the market. Do you think we picked the best funds to invest in? Let us know which funds you like best in the comments below. As always, please subscribe. Thanks for watching.